Hello guys, and welcome back to my YouTube channel. So in the first video we studied about trading for beginners, the basics of trading, what is trading and everything, what are brokers and everything. So that was the first video that we went through. So in this video we're going to go deeper into some aspects of trading as a whole. We're going to look at brokers, what are brokers, and everything concerning brokers. So that's what you're going to look at today. So what is a broker? A broker is a middleman that connects the traders to the financial markets. So a broker is a middleman that connects a trader to the financial markets, or that connects traders to the financial markets. Which means, for example, if you want to buy or sell a currency like USD, you cannot just go directly to the global Forex markets. You instead use a broker which provides you with a trading platform and sends your orders to the market. So like think of it like brokers are like real estate agents. So like the agent connects you to the sellers and also works on your transactions. So after working on your transactions, you get to pay him a fee. So brokers are like real estate agents. And so they're a bit similar. They help you with providing you with the financial markets. They help you with providing you with data, like the pairs, like the real USD, the GBP USD. And so they provide you with data, and also they provide you with the orders that you place into the markets. So a broker is a company that provides traders with access to the financial markets and allows them to buy and sell assets such as currencies, stocks, commodities, and cryptocurrencies. And so there are very many brokers like IC markets, brokers like Forex.com, brokers like Pepperstone, brokers like Xness. So there are very many brokers. So you can just pick one. But most of them you can deposit around $100, $50, $200, and then you start trading, and then you place your first trade. So now we're going to go deeper into trying to understand what really a broker is. So why does broker choice matter? So your broker holds your money, executes your trades, and sets the rules of the game. Choosing a wrong broker can cost more than a bad trade. So 0% what you recover from an unregulated broker that disappears. So there are two types of brokers. There are regulated brokers and also unregulated brokers. So the unregulated brokers, they're kind of sketchy brokers. So you might not know if the broker is going to stay around for long, or you may know that the broker might leave. So it's really on you to understand and get nice brokers that can hold your money, that can withhold your money, and are trusted, and they have been there for a very, very long period of time. It's really essential for you to pick the right broker. 100% of your deposit funds are at risk with no client protection scheme. So like if you pick the wrong broker really doesn't have really good data and good equipment to protect your money, or good setups in place to keep your money and protect your money from being stolen or being used. So picking a right broker really matters a lot. The first step before strategy is verifying who actually holds your capital. So you must pick a right broker. So you shouldn't just focus on only learning how to trade. You shouldn't just focus on only the pairs. You must also focus on even understanding the right brokers to protect and keep your capital from not being stolen or from not being used inappropriately. So it really matters a lot to pick the right broker. So the bottom line is in this video, a great strategy with an untrustworthy broker is still a losing setup. So you need to pick the right broker. So you need to pick a regulated broker that can protect your funds, that can help you to trade, that can help you to be in the market longer, and also give you confidence when you're trading. Because if you have no confidence when you're trading, when you don't know the broker that you've picked, so it's going to be really, really bad for you. So you need a right broker. So what does regulated mean? Because like I might say a regulated broker. The regulated broker is licensed and supervised by a financial authority that enforces rules designed to protect traders. So regulated brokers are licensed to protect traders that put their money in those brokers. So a broker cannot just run away with your money out of the blue like the unregulated brokers. So the regulated brokers help you with keeping your money, protect your money really well, because they are licensed, and also in case they fumble your money, they can face severe consequences like lawsuits. The owners of the brokers can be put in jail. So it forces them to keep the money and to also not just use the money anyhow. So the regulated brokers are really, really helpful when it comes to keeping money and also protecting capital. The money is kept separate from the broker's operating funds. So unlike unregulated brokers, regulated brokers have devices in check or have setups in place to keep your money or to also keep the money in the right places. So it helps you to have the confidence to trade the money, or also helps you to have the confidence to also trade really well because you know your money is being kept well. So capital requirements. Brokers must hold minimum reserves to operate and absorb losses. So there are rules in place for the regulated brokers. So they cannot just come out of the blue and just start a broker out of the blue. So you need to have real good setups in place. You need to have reserves, money reserves, so that in case of anything, you can't just run away with the traders' money. So which helps the brokers, or which helps us as traders to be confident in trusting these brokers because they have systems in place to protect the money that we are trading, to protect also the profits that we make. Investor compensation schemes. So funds may be reimbursed up to set limits if the broker fails. So like the regulated brokers can refund your money in case the broker fails. So there are rules set up in place. So in case they fail to operate, they can still refund back the money. So now that's a good thing with regulated brokers because they have systems in place. In case anything goes wrong, they can still refund the money that you put in their account. So that's a good thing about regulated brokers. Regular audits and reporting, independent reviews of finances, conduct, and risk control. So regulated brokers are always being monitored and also have regular checks of the finances and also conduct risk controls. So that's a good thing about them because it's going to always force the brokers to always keep the traders as a priority because they're going to always have these reviews of finances. They're going to always conduct risk control. So it's really, really effective. So there are top regulators in the world. So like brokers have regulators that they work under. You cannot just bring out a broker. You can't just start a broker out of the blue. You need those regulators to regulate you and also guide you and also inspect and also supervise you like when you start a broker. So these top regulated brokers have regulators around the world. The name of some regulators are the United Kingdom Financial Conduct Authority, the Australian Securities and Investments Commission, the United States National Officials Association, Cyprus Securities and Exchange Commission, a German Federal Financial Supervisory Authority, Dubai Financial Services Authority. So those are some of the regulators of these brokers that you want to trade with. It helps with understanding the brokers that you want to place your money with, that you want to put your money with. So it helps you to understand that, maybe I can use IC Markets, and maybe I can use Forex.com, maybe I can use Paperstone. So it helps you to understand. So I'm going to show you other differences between the regulated and the unregulated brokers. So for the regulated brokers, funds held in segregated bank accounts. So they have reserves. Regulated brokers have reserves for traders' money. So it's going to help them to be well organized and also keep the money well without it being mixed up in other stuff. Licensed under a named financial authority. The financial authorities help to regulate the brokers. So this license helps us to understand that no, this broker is not some sketchy broker. So you can trust it and use it. Compensation scheme if broker fails. So there are compensation schemes in case the broker fails to maybe continue with the work or the company maybe dissolves. So there are compensation schemes for the money that is lost. Transparent fees, spreads and execution. So the spreads of regulated brokers are really, really very, very fast, and also it is really easy to trade with them because they are regulated, because they are controlled. So clear dispute resolution process. So let's go now to the unregulated brokers. Funds may be mixed up with company cash. So the unregulated brokers sometimes really have poor management issues. Let's come out of the blue. So which means that they're going to be really, really disorganized, which can lead to company money and traders' money being mixed up, which leads to maybe failure in paying back profits. So it's really, really risky. No oversight body to enforce rules. So there are no rules, so they can just do anything that they want. And no protection if broker vanishes. So if a broker vanishes, so they can just leave you with no compensation, unlike the regulated brokers that can leave you at least with something after the broker maybe fails to continue. So there are hidden fees, records, slippage abuse, little to no recourse if scammed. So now like the unregulated brokers, you can never really know. You can never really know, because if you're scammed, you can never really know if maybe they can pay you back or if they can do anything. So it's really, really key to use. It's really, really key to use the regulated brokers. And so we're going to go through some must-have broker features. So like you need to, in order for you to get the right regulated broker or the right broker, you need to know that my broker has this and this in place, so that I can trust it. So I can trust it, so I can use it. So beyond regulation, this feature separate a solid broker from a mediocre one. Tight spreads and low fees. A lower cost per trade compounds into real savings over time. Spreads are fees that you pay when entering a trade, so it's a small fee that you pay when you enter the trade. The unregulated brokers may have a very, very high spreads. Fast, reliable execution. Orders fill near the price you click with minimal slippage. So the good thing with regulated brokers, the orders fill well when you click buy or sell on the chart, so the order is going to fill well. So quality trading platforms like MetaTrader, cTrader, or proprietary apps that are stable and intuitive. So so like when you're trading, you also need a quality trading platform, like MetaTrader, like cTrader, to place your trades really, really well, so it can also help you and give you confidence when you're trading. Easy deposits and withdrawals, multiple funding methods with clear processing times. So like most regulated brokers really have clear withdrawal methods. You need to check for, does a broker have a demo account? So you need to understand that a broker needs to have a free demo accounts for you to check and see the spreads. Responsive support, real humans available when something goes wrong. So you need a 24/7 support that can help you in case you need anything. So it's really, really key, and also it really, really matters to how to open a demo account. So we're going to get into how to open a demo account. I'm going to show you an example using IC Markets. Here's a regulated broker. So a risk-free way to test a broker's platform and your own strategy with virtual money. So this is IC Markets. It shows here the country of residency. So yes, so it shows here the country of residency, the first name that you can place, and also the email, and also your phone number, and also you can submit. So so now this is an easy way to open a demo account. As you can see, it's showing you open demo account. So and then you can just start trading. So that's a simple way of how you can start. Red flags to avoid in brokers. If you spot any of these, walk away, no matter how good the marketing looks. No verifiable license number or regulator assisted, guaranteed profit or risk-free return. So trading is a risky business, so like there is no guaranteed profit. So so you must work for every profit that you make. Pressure to deposit more to unlock withdrawals. So like if you find a broker, if you find a broker putting pressure on you to deposit more money in order for you to get better gifts, it's really, really sketchy for a broker to do that. So it's really, really important that you also understand that withdrawal delays, excuses, or extra fees. So if you see any of these signs, it's not a good sign. Unsolicited contact via social media or messaging apps. So like if you find a broker messaging you out of the blue, or or like forcing you to deposit money. It's not really good. Bonus offers with confusing withdrawal conditions. So let's go into the last part of the video, which is the lesson recap. Regulation protects your funds and gives you recourse. Check for FCA, SIC, NFA, CYSEC, BaMFin, and similar licenses. Unregulated brokers carry real risk of total loss. Compare spreads, execution, platform, and support. Always test a broker with a free demo account first. Walk away from guaranteed profit or pressure tactics. So I think that's it for today's video. I'm going to be in the next video. The next video may be around mastering risk management, position sizing basics, stop loss strategies, and also others. Like and subscribe to my channel. That's it.